Tuesday, we will go into a new chapter that we had the Z-Man from our chat room, right, with me about intraday pullbacks. You know, he does a lot of trading where he's not trading breakouts necessarily, but he's trading intraday pullbacks and using some indicators and things that, you know, I personally don't use that often, but then, you know, I've been incorporating into my trading, and I have noticed that it works pretty well. And so what we're going to do is incorporate some of that on Tuesday. And then Wednesday, what we'll do is we'll have a session where we wrap it all up in terms of our coursework. And then I'm hoping to get like either Mary Beth or Z-Man to do a special webinar, you know, just talk about some different things that maybe new traders go into. You guys can ask them some questions on just maybe some stuff that I miss. And then we'll go from there. Now, the one thing is, guys, you know, with me, you know, you guys, if we're missing a piece of something, you guys can always ask me, and, you know, we'll do as many webinars as we can. You know, I'm not really that worried about it. Alex, it sounds bad. Can everybody else hear me? Okay, Ryan's saying, Ryan, Alex, can you turn off, Alex, can you turn off your thing and then log back in? It might just be your computer. Because I have got full signal here, so it looks like, you know, we got fast Wi-Fi going. All right, cool. Thanks, Steve. All right, let's get to it, guys. And Alex, let me know, or email Tim, Tim@BULSON, if you got any issues. If you don't know Tim, he's a professional tech guy. All right, let's get to it. So news trading, guys. I find that news trading is important, not necessarily because you need news to like be a great trader, but if you ever think about it, like some of the plays, right, that just go up so much in one day. You know, like if you're talking about stocks that go up 50% in a day or 100% a day, or if you're even talking about the stocks that go up right over the course of weeks 100%, 200%, right? They don't, technicals in terms of our charts, right, they can lift stocks because of the supply and demand dynamic. But it's not like the technicals alone can make a stock just go up like 100%, or they can make a stock go up 200%. You know what I mean? You have to have something else behind it. And so I think that news is just very important, because when you couple news with technicals, now all of a sudden, you know, you're marrying what we know about fundamentals and what's, you know, important about things that impact companies, and then we're marrying it to what we know about technicals, and so all of a sudden you have super setups that can really explode. So I guess the first thing that I'd go over is just some of the different news sources that I personally like that I've used before, and you know, we can go past that. So number one is Yahoo Finance in play. You know, I find that Yahoo Finance can be just, you know, it's a good overall website because it's just well known, and they have a lot of stuff on it. Now, I'll be honest that I don't sit there and read this shit anymore. I don't. I mean, I used to do it all the time when I was really interested in news. And now we have our Gapper PR earnings breakout, where we just scan for the gappers, you know, using stock market watch, right? You know, we use this to find the gappers, and that'll tell me what's gapping. So, you know, I become less interested in news. The other thing that helps, that has made me less interested in news, is that, you know, I do a lot more day trading than swing trading, where before I was doing a lot of both. You know, I was actually 75% probably swing trading, 25% day trading, where now it's like, you know, the roles are a little bit reversed, where I'm doing so much more day trading than I'm doing swing trading. And so I don't really care about the news as much, because, you know, I'm looking for a gap and then I go. But when I was doing a lot of swing trading, you know, I was interested in what was going on, you know, in these type of companies and stuff like that. So, you know, I like to read, you know, because I was, if you're planning on holding something overnight, sometimes, you kind of want to know what the news is, right? Beyond just a technical gap. I really like Benzinga. These are friends of mine. They actually, their main office is in Michigan. They have tons of news, and I really like the way the company's set up in terms of delivering news, and so, I read them. Uh, 24/7 Wall Street I find to be one of the better blogs that I read that has news, because they're always posting stuff. I can get here, and I just put all this stuff in my Google Reader, guys. I don't go in too crazy and talk about, is there, this or that. I like putting everything in my Google group, Google Reader, and then I can flip through this stuff. So I really like, really like 24/7 Wall Street. They have a wide range of articles, I find. I can usually tell by the title, if it's something I want to read. Flu epidemic likely doomed for funeral. Maybe like something like that might give us a clue on, maybe a sector that's going to run real quick. I won't sit there, guys. Let's not be crazy. I'm not going to sit there and read all this stuff, right? I'm just looking for, titles. And so, like ARQL, that's a $3 stock that we trade often. I've traded it before. You know what I mean? So, like, that's something like I would read the article because that's a stock that I trade. SEC gets some pushback and decisions allowed cooperative. I don't know if that really affects anything I do, right? And so, like, we want to be selective with what we read. Holiday sales slide at Best Buy. Well, Best Buy is a stock that we short and go long quite often. So, like, to me, like, I'm interested in what they do. You know what I mean? And so that is something that we'll be really into. So I'll flip through all this stuff, right? And it's not going to take long. It's going to take literally probably just a few minutes, and I'll read it. And I do all of this through Google Reader. Google Reader is awesome. Like, you go on any website, and, you just click in, see this button right here, subscribe. Every website will have this. Even Bulls on Wall Street has this, right? You hit subscribe, and it's going to take you to this thing, and see, it says choose your reader, right? And, you can sit there and do all this, but the main thing is just hit Google. You put in Google Reader. I'm sure a lot of you guys use Gmail. I've emailed with a lot of you guys, and there you go. You'll have all the stuff that you read that, you find interesting. And guys, I have more than just stocks. I read a lot of traveling blogs. I like to travel. And so I read a lot of traveling blogs and just random stuff, because that's what I'm into. And, so it's just real simple stuff. I think Google Reader, just having everything in one spot so that you don't have to sit there and filter through it, is going to be huge. Like DND, we trade the stock, right? It's like a $5, $6, $7 stock, and we trade a lot. So I would read this because I just want to know what the heck's going on with DND. And I also think, like, say I'm reading this on Sunday, so I'll know mentally, like, hey, let's keep an eye out for this. If it gaps on Monday, maybe it'll be in play, so on and so forth. So I find, 24/7 Wall Street, it's free. I really like the Kirk Report. The Kirk Report, I believe, costs $50 a year. I've actually been reading him since college. Even my login is, I think part of the reason that I'm just paying the $50 a month is that, I've been using this site since college. It's even got my old college email. And so, I really like using it, but I think he's got some good stuff, great articles, and, he's always kind of, like, he'll always kind of give, like, I like reading in the morning. He'll give, like, an idea of what's happening pre-market. And so this will help me get an idea of today's key factors, right? China export surge, boosting trade surplus, blah, 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 Bank of England. Like large POMO buy opportunity. That'd be probably something interesting because those usually kind of lift up the stock market. POMO means when the Federal Reserve is buying stocks essentially on the open market. So what does that mean? Well, the stock market these days is an artificially high stock market because the Federal Reserve spends about 40 to 50 to 80 billion dollars a month buying stocks to lift up prices, right? So knowing when POMO operations are coming is so important. Just because that gives the market an underlying support, right? It gives the market underlying support. It's like, hey, if the market dips, today the Federal Reserve has POMO operations. They're going to buy $10 billion worth of stuff that could give it a floor, the market a floor, right? Weekly jobless claims, that usually impacts the market. Not much, but it's just, people watch it. Greek employment, blah, blah, blah. So the strategy. As the 7-day gets under focus will be to break away from this tight trading range behind last week's high and this week's low, blah, 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 given the choppy price, blah, blah, blah. So the bears innovative provides a clear advantage to the bulls, blah, 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 blah. Right, so it's just getting a summary, and I do this a lot with even our folks, but for me, it's always, as a person that's like giving advice to hundreds of people, I have my own biases, right? I'm just a human being. I look at things a certain way, and that gives me a bias. And so I find it really important for me to look at something like this and just get another person's opinion, not because I'm going to use it, but the main thing I really like to do is to see if I am analyzing the market in a logical and analytical way, or whether I just believe, I look at the chart of the S&P and I think, hey, it's going to go up, and so that's what I focus on. Everything's going to go up. It's going to break out. I have a personal bias, and so I like to see what another person's saying because, right, I'm not the tell-all of everything, right? I've been trading a long time, but I've been a full-time trader for only a third of that time. I still am getting better at my game, and every day I improve, and that's really important. And so I want to make sure that I'm not personally biasing myself, and I'd like to see what other people that I trust, that I've known for a long time, that make great decisions. I want to see what they're thinking, right? It doesn't mean that I'm just going to follow them and change my things, but right, like I've been, I was in MSU in the year 2000. So like this guy's had his blog, right, for 13 years, and I've been reading it. So there's an inherent trust in there that I just like to know his opinion because, you know what, he was a full adult that had a full blog when I was still a kid, right? So he's probably better than me in a lot of different ways, and so I like to see what he's doing. And then, there's some other cool tools. They've just got some cool, interesting resources, book recommendations. He actually does like a 4-day boot camp for his folks. I really like the tools in terms of he's got a notebook. He's got a prospector that's like I can't use this because his scans don't work like mine, So he's got a prospect of things that like he's watching and stuff like that. He mostly trades ETFs now, but it's still it's still kind of cool. So I like it. I mean, it's not the best website. I'm not saying that this is something you guys got to go and sign up for, right? But sometimes you just find something you have tools for. Like I really like reading these interviews. This is more of a fun thing, but he does a lot of interviews with like popular swing traders, popular traders. And, he'll ask good questions and stuff. And so I like, when I have spare time, I mean, I've actually been there for most of the live interviews and stuff. He doesn't do them like crazily that often, but I like being there for them. And you know what? For $50 a year, for me, it's worth it. Google News Alerts. Google News Alerts is interesting because if you have like a particular stock you're watching, right? This is like one of your holdings in your IRA. You're going to be watching for a long time, right? You can sit there and right, put a search query like, I'm interested in, if there's news or blog or discussion, right? So it's going to go to the chat room. It's going to go into the stock YG, right, as it happens. Or you can do once a day, only the best results delivered to, right? So you create alert. And so when somebody, see this alert, okay, so I already have an alert for this stock. But, right, so when somebody's talking about YGE, all of a sudden it's like I'm getting an alert for this stock. So if you're watching a particular stock on news, that's important, right? If you're looking for anything, like, I don't know, it could be anything, right? I mean, if you're looking for news on ways to, please your man, then, you could put a Google alert on it, and all of a sudden now, right, anytime somebody uses that phrase, you're going to get it. And for stocks, it's a lot better, right? Because on the internet, people are talking about all sorts of stuff, but in terms of like actual tickers, right, that's not as prevalent. And so if somebody puts it on a blog or something like that, maybe you want to know about it. Hi. Equity feed. I used to use this all the time. I don't use it anymore. It doesn't help what I do, and it's expensive, but it's super cool. So equity feed is like a trading platform that's like really nice. It's also got a ton of scanners built in, and it's got a ton of news scanners. They literally have like news scanners. If you are like, they've got a great alert system also. Scanning, powerful, watch the markets, trade decision support, charts, like they got good charts. News, they got a ton of news that's built in. So it's like if you want to pay for it, you can get like a news scanner, and then just all this stuff. Right? I've become much more simplified in my trading. I used to use all this stuff. I used to do a lot of PR trading where, like after SEC filing came out, I'd read it and then buy it, or, so what I mean, if the news would come in so fast, I would buy it before it comes out, because there's only a few people that have equity feed compared to people that have, say, Yahoo Finance, right? And so you can use nano cap equities, micro cap equities, U.S. equities. They've just got a lot of different things. And I don't know if this is worth the money. It's worth the money if you can use it. I found that I wasn't using it that often. You know what I mean? And so for me, it became something that was like a luxury that, like, when I was bored, I would have it. And you know what? I could use it. As it has enough features to make it worthwhile in terms of market monitoring, right, the news and filings. But, I just found that I traded a lot better on technicals than trying to analyze specific news and then find out what was going to pop and, so on and so forth. DealWire is incredible, is a nice, I find DealWire that was probably the most helpful one, because they talk about buyouts, financing, funding deals, right? So you find out companies, in trouble, and they finally get financing, right? That could be a stock that's going to have a huge, huge pop, and so, it'd be good to read. But what I found for what I do is that it was a lot of information. At some point I had to make a decision. Am I going to run a chat room, answer questions, and be a technical trader, or am I going to sit there and try to read news and be a technical trader? And then I couldn't sit there and do other things. I mean, you can only do so many things, right, before you get information overload. And that's how I was. I found that I was getting a few trades a month out of it, and I'd make a few $100 or $400 or $500 because I'd get the news before everybody, or the people on Yahoo Finance and stuff like that, because you get so many news features. But it didn't necessarily mean that, like, that was part of everything I do. And so, I just kind of cut it out. I said, you know what, enough is enough. Let me just turn off this Google Mail Checker. Why is there two of them? Just play them. Boom. We'll turn this one off. We'll turn them both off for now. We don't need to be listening to this stuff. All right, so it was cool. And the other things, like if you have a Ameritrade account, or it depends on the broker you have. They handle a lot of different brokers. But if you have, like, say, an Ameritrade account, you can actually trade from there. So it's like you're gonna, get access to news and scanners and all that hoo-ha, and then you're gonna be able to connect your broker to there. So like when I was using it, I could trade from there, and it has a really cool setup and stuff like that. So I don't know. I thought it was cool. I just, I couldn't do it myself. eSignal is pretty cool. This is like, this program I use, Quote Tracker. It's like Quote Tracker on steroids. Like you can do a lot of stuff. You have multiple monitors. You can have each monitor do different things. But like it looks cool. Like I don't know. I think that you can have your chart, your data, your watch list, your news. You can do a lot of stuff on this thing, and it's sharp looking to me. You can have it white or black. It doesn't really matter. But live charting, real-time news, real-time quotes. I mean, pretty much anything you want. It can cost 30, 40, 50 bucks a month. It can go up to hundreds. I know the one I was paying for was like 200 bucks a month, so it wasn't worth it for me. But it's pretty awesome. I mean, it's got a lot of features and stuff, and there's trading integration with it. So the market data solution partner, let me see, trading integration. So they got some different brokers that you can integrate with. There's actually a lot of prop firms that I know of that use them too. So you have a specific prop firm, you can use them. So Lightspeed, Ameritrade, MB Trading, TD Ameritrade, they've got a whole bunch of them that you can use. And there's a lot of brokers, interactive brokers, blah, 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 blah. So they've got some features and you can trade from there. I don't know if you necessarily need it. It's just a grid charting. Basically you're going to pay 100, 150 bucks a month. You're going to get live charting like you would with TC2000. You're going to get real-time scans. You're going to get your news. And you're going to have trading integration, but you're going to pay for it, right? You're going to pay 100, 150 bucks. They say 25, but you're going to have to pay for data and all that stuff. So there's a little bit of a price there. And the other thing that comes with the price, like say you're using, one of our Lake Street accounts and you're trading through Dash Trader, then you're trading through this. Right now you're all sitting here paying like 250 bucks in fees a month just to have all these tools that you might not necessarily need. I use Twitter a lot, especially for news. B-Man Microcaps is in our chat room. He's really good with news. He posts them live, and he always posts like a little bit of evidence. I'm not saying that necessarily you got to buy, what he posts, but I definitely read what he posts because a lot of the stocks, I mean, if he'll post 10 news articles and say he's entering a stock, 7 of them will be dead and they won't even move, but like 2 or 3 of them will explode. And that's how news is, right? You don't really know how people are going to interpret the news. I mean, we're not like scientists here, but a few of them will explode. And so I always think it's very worthwhile to pay attention to them. Daniel Mardorf is a good friend of mine. He's mostly a short seller. And so, biotech will go up 300, 400%, and he'll do all the research to figure out when they're going to dilute their shares, when they're going to sell something. And so he literally, he posts a lot in the news and what his research is. And so I like looking at him, and he's a friend of mine. Mark Flo Chatter, he's another one that posts a lot of news, and he'll post very specific insights, of like things that are happening at a specific contest or, anything like that. He's going to be posting the news. And then there's a gentleman like Trade-Off who does not post as much, but when he does post, I've made some killer trades. Like he'll post something that'll say like, hey, stock XYZ is delisting off the NASDAQ. They didn't get their share price up enough, right? Because if you're under $1, NASDAQ won't hold you. They're not going to be able to get their share price off, and they haven't met their requirements, and so they're getting delisted. Well, if the stock's getting delisted from NASDAQ to OTC, right, most likely it's probably going to tank, and so like you can short them. And so I'll literally sit there. He'll post something like that, like a delisting, and I'll short the crap out of that stock because he's getting the news before everybody and before it's on Yahoo Finance. And so he's really good and quick about that. It's not something I would say you guys should just sit there and be like, hey, I'm going to follow these guys. But these are people that when they post something, I'm digging into it more. I'm digging into it more to see what's going on. How to read and interpret PRs. So, guys, most of the things, especially with small caps, is that 99% of PRs are just bullshit. I mean, they really are. They're specifically made to pump up the price of some certain type of small cap stocks, and then, some adverse reaction will happen to it. So small cap companies, especially in nascent stages, will have to continuously raise money so that they will constantly put out PRs to keep the stocks in the minds of investors. Oftentimes, if the company is in trouble, what you'll get is like a series of positive PRs to raise the stock price so that the company can dilute shares. And if you think about it, like so many of the hot companies that we've seen that just skyrocket, they all, when they get to the top, they will dilute shares. RSG did it numerous times when it was flying up like this. JVA had multiple equity offerings when every time it had one of these big pops, they would dilute shares. So what diluting shares means is, we've learned about float. So say a company has they have 100 million shares out in the float, and the price is $7. So they have a $700 million market cap. So what will happen is, the price gets up so high, what they'll do is say, instead of 100 million shares float, let's sell on the open market 50 million more shares, right? So you're diluting the company by those 50 million shares. So that inversely is going to impact the price of the stock because you just added 50 million shares, but the value of the company is still 700 million. So now instead of doing 100 million divided by 700 million to get $7 stock price, you're going to do 150 million divided by 700, right? So you're going to have that adverse reaction. So when somebody dilutes, the stock will tank because they're going to dilute by a lot. When reading a PR, we are looking for certain things. Anything that is new sales, new partner, new contract. We want something that is going to add, right? We want something that's going to add. This is the thing about it. Say like a company like Bulls on Wall Street, right? We're a small company. It's a family business. Say, some company says, hey, we're going to sign a contract with Bulls on Wall Street, and that contract's going to net them $2 million a year. Well, think about it. I mean, this company is just me, my joker buddies from high school, right? And and 3 or 4 of my students that I ended up hiring, right? That took our boot camps. Jordan, Ajit, Mary Beth, those are all people that took our boot camps. I ended up hiring them, right? So it's just a small family business. And so somebody says, hey, we signed a contract, it's worth $2 million. What's the value of our company now, right? 5 times more, 10 times more, right? It's not like we do crazy amounts of revenue. We have 100 people in the chat room, and, we do these classes. So that's how it can impact. These small cap companies, especially, even large cap companies, I mean, you have to kind of gauge how much sales it is compared to what they do. But, I mean, if you're a small cap company that's worth 20, 30 million, and you got 2 or 3 products, right, that do X amount, you add a new one. Well, even if it's a small product, right, you don't have that many. So all of a sudden now, right, you've got a huge impact in the stock price. These companies like some of these companies like CLNT, when CLNT would have like these huge pops that would go out of nowhere, these pops literally would have come out of nowhere, And every single one was based off a $1.4 million order. You know, it would literally, stock goes from 2 to 9. They had in those 2-3 days, 2 PRs stock. A company made a $1 million contract. Company made a $1.5 million contract. And, you know, most people don't read that deep into it. They don't realize, like, hey, maybe they do $100 million. It's a very small investment. They just see, right, a new contract. And so all of a sudden, you get a stock that explodes and really explodes out of nowhere. You know, that's how like BGMD was, right? BGMD, I mean, it was just a PR of one thing. They had one good thing that happened, and the stock had been getting killed forever. So all of a sudden, boom, it just pops up. And look, it's right all the way back. You know, once people figure out what's going on, they realize it's a piece of crap. But because nobody's reading it in the beginning, right? Anything that's new looks hot. Number 2, anything reaffirming previous PR. Oftentimes, a stock will pump up, then come back to the original spot. Then they will re-release the old PR, giving it the same pop. Biotech stocks, especially stocks like AEZS, man, all those little RNN, RPTP, all those little biotech stocks, they will re-release the same PR over and over. And so what's going to happen is, you know, they come in, a VRML is case in point. They do it all the time. And actually, guys, if you guys remember, last time VRML popped, I shorted it right here. It popped here. And I know the VRML always fades because they re-release the same PR. So the stock's at $1.15, spikes up to $1.95. Right as I got an intraday fade into it, I shorted the thing at, you know, 180. And then, you know, 2 days later, you know, I started covering this thing, you know, and it's just whoop. And then, right, it just gives it all back. So that's really huge. And look at this, right, in March, it's at $1.25 and spikes up to 301, right? That's a huge, huge gain. And then look what happened. Couple days later, it's lower than where it started. I mean, that's huge, right? And then look out of nowhere, right? It spikes up again. They reuse the PR. They reaffirm the PR. Then it tanks, goes back to 175. Then they reaffirm the PR, some different PR, and then tank, and it did it again. And so I don't even read the PRs in the stock because I'm so lazy. When it does these big hyperbolic moves, $3 to $8, I'm only looking at one thing. I'm trying to short this motherfucker because it always fades. You know, like it literally always fades. You know, look at this thing. It used to be $30. Like, come on. You know what I mean? It used to be $30 in 2009. Like, this thing is a fader, right? And yeah, sure, one day it's probably not going to fade, but I don't do it just like, I don't just short it just to short it. Like if it pops, I don't just short it to short it. What I do is I understand that most of the PRs are regurgitations, right? I'll copy and paste it into Google, the PR. If I see the same text from 3 months ago, that's what I did this time. This time, I was on Yahoo Finance. It popped in the morning, and what I did was I sat there, and I copy and pasted the PR into Google, right? Because Google, if it's seen it before, you're going to see the PR show up. So the PR, the same text comes back right in. And so all I do is copy and paste, stick it in Google, and then I know it's fake. So I know that sooner or later it's got to go down. Sooner or later it's got to go down as traders realize that this is a bullshit PR. But the question is, you don't want to get stuck in one of these, right? Because the stock at times will go from $1 to $3. So you don't want to, right? You short at 175, then it goes to 3, you're fucked. You know, it goes from 3 to 750, you're blown out. And so, like, you don't just short it just to short it knowing it's fake. What you do is, right, when it pops, when you finally get the intraday setup that it's going to crack, right, breaking through support, red to green, breaking the VWAP, right, we have a few different things that we use, then you take the short. And PSI, we're going to go into more intraday trading and pullbacks come Tuesday. Stocks with positive PRs that have beaten down charts, that can ignite a stock as short sellers have to cover their shares. Then the PR traders come in buying the shares based on the PR. Right? So those are the fundamental traders. But then, guys, then what happens, right, is that the momentum traders, those are the people like us. They come in and they sense that there's a PR. Then they sense that there's going to be short covering. And so what these guys do, the people like us, we get excited. The stock pops. All of a sudden it bases out, right? It goes sideways. And then, then what happens is when it bases out, they're buying the intraday breakout and boom, right? Now all of a sudden you get the momentum traders coming in, coupled with the PR traders, and bada boom, bada bing. It does look a little bit flattened out like Scottie Pippen, I'm not going to lie. Guys, if you guys don't know, Julie, Tim's girlfriend, has fallen flat on her face and possibly broken her nose, and now she looks like Scottie Pippen, the basketball player.
It's not even funny because, honestly, like, my nose really hurts.
I know. It does look like it hurts. But now, I mean, you are from Chicago, and you look like Scottie Pippen. It's very fitting.
It's okay now.
This is the stuff you happens when you go on vacation with multiple people. They're falling all over the place. They can't even control themselves. You guys are lucky that I'm the responsible one, always looking out for everybody. All right, so PR examples. Let's get into this. Royal, guys, I'm going to tell you this about Royal. Royal is an oil company. Royal is an amazing, 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 amazing oil company. I'm telling you, this is one of my favorite stocks. So for a while, like, I know that Royal, like, you could see, like, every few months, right, it goes on a run. And it always coincides with the prices of oil is, like, really, really, really high. But then it'll go on these epic runs, all right? And so, you know, every year since 2008, that's when I started trading this thing. I found this stock from Superman, Super Trades on Twitter. Yeah, he's actually a good friend of mine. And every year, like in 2008 when oil went to 150 bucks, he rode this thing. He was posting it on message boards at 2, and it went to 15. Then it came down, and then in 2009 it went from 2 to 4, 2 to 4 a couple times. Right, in 2011 it went from 2 to 8, and then it came all the way back down. And in 2011 again it went from what? 2 to 7, came all the way back down to 2. So 2 is where it loves to be, right? Comes back down to 2. The PR comes out, and this is a monthly chart, so right, it happened over, you know, a few days or a week. It's not just one spike, but it went from 2 to 5.15, and it always comes back to 2, right? So what does that tell you? This company is just a genius at putting out these PRs and pumping up the stock price. So what I personally would do is, like, you know, on my watch list, and I actually, at that time I was using the equity feed. And so an equity feed, and you can do it on this too, you can have a watch list with all your favorite stocks. And then when the news comes, right, it'll put up one of these light bulbs, and then you can see, you know, you can see the actual news, right? So you put in like a CLT, and it'll say UAE clears, blah, 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 blah. So I would have like an alert. So the minute the news would come out, I'd just buy it, because like I knew Royal would just run off these PRs. Since I had an equity feed, and then I was using a software called Newsware for a while. And when the Royal PR came out and it was near 2, I would just buy 2,000 shares. Because I knew it never, it's just from the chart, right? It never goes See this? I mean, the stock's been around forever, right? It never goes really below 2. You know, it's gone to 142, but it hasn't been there since 2009, right? And then since then, we've basically been kind of, the 178's kind of been the bottom, right? So 178, 190, whatever. So then when I see the PR, I just buy it. I wouldn't even read it. I would say look for anything positive. They have a new well. They have a contract, right? Boom. I just need to read like 5 things, 5 words. I liked it. I bought it. You know, and it was literally that simple. You know, I wasn't reading like too into it, like trying to figure out what the news was. And it tends to run for a couple weeks. I mean, it does. I mean, it's not like you just buy it and then, you know, it's that day. There's a lot that goes on to do a stock like that, but this stock is a mover. Every year, it spikes up hundreds of percent and dies. I mean, these are not small spikes, right? These are $4 to $12, $2, $14, right? $2 to $4, $2, $8, you know, and so on and so forth. And so set an alert. When I'd read it, I'd buy. But the genius of like this company is that they'll do all sorts of things. So they'll put out these reports. Oil and gas prices start to stabilize. Royal Energy Transatlantic will benefit. And so like they just put out some bullshit PR like that, and it'd start to go. Royal Energy, USGS, right? So what is it? United States Geological Survey. Assessment of up to 2 billion barrels of oil in the North Slope. So in the North Slope, there's 2 billion barrels, right? That's Alaska. First of all, Royal's right, a small little company, right? What's their end of that $2 billion? They don't say. They don't say. The other thing is, look at how clever it's written. Up to 2 billion. So literally, if you have 5 barrels, right, it could go up to 2 billion. Look at if you read the small print. The estimates range from 0 to 2 billion. 0, guys. It's not, they could have had 0. And boom, right? That's what can knock up these stocks. So, but the title reads so well, right? Up to $2 billion a barrel. And it says Royal Energy. But now the USGS doesn't say anything about Royal Energy. It says up to $2 billion of oil in the North Slope, right? Royal Energy basically stuck themselves in there probably by paying for a PR, putting on the flyonthewall.com and Yahoo Finance and letting it run. And this type of stuff just drives up the stock price huge because it reads well. Guys, we can short these things too, right? When they crack and everybody figures out they're, you know, not legit. I was going to say the bull S word, but I noticed that I already swore 2 times, and I promised I was only going to do 3 swears a day. I already used up 2, and I'm going to save my next one for something really awesome. So, Kevin, be quiet. So, that is the beauty of Royal Energy. I love this stock because when it goes, it goes. And then look what happens like later, right? You know, just like 3-4 days later, Royal Energy unregistered sale of equity security. So essentially what happened, right, they never had any cash on the books because they don't make any money. So the stock price just goes up so high every time. And so what they do, say the float is 10 million, right, and it's at $7. What they'll say is, well, let's make the float 20 million and, right, we'll sell it at $7, everybody, but that will tank the stock price. And so they literally do that every single time. They will sell the stock. And it's really brilliant if you think about it. If you're a small cap company, why not pump, and you need money, why not just pump up the stock price and everybody's interested in the stock because of the PRs, right? And then you dilute it by 50%, but you got to sell your shares at $7, $8 at this inflated stock price when it always goes back to 2. You know it's going to go back to 2, so why not just sell off a few, take the cash, pay yourselves, right? Pay the CEO, pay the vice presidents, everybody gets a little fun time, and then boom, just dilute, dilute, dilute. And that's really important because if you see like a stock like Royal, the float is so low, right? So you can dilute it because there's not that many shares out anyway, because it's a tiny, tiny company. It's a tiny, tiny company, and yet it trades a lot, and it gets millions of shares of volume when it goes. So what's the float on this fucker? When I started, oh shoot, that's number 3, damn it. Right, the float is 8 million, which is, right, guys, that's a micro float. 8 million shares. And 1 million shares are short, blah, 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 blah. This is the beauty of Roll, right? Look how much they do in revenue. $5 million. So it'll trade all these shares when it goes. When it goes, it'll trade millions of shares. But it only does 5 million shares in revenue. $5 million in revenue. Look how many employees they got. 23 million employees. 23 employees, right? So this is just a small little company with a few employees, right? I was 23. Who's the janitor? Who's the secretary? So they pump it, and then they release it. You know, so you'll see this thing every time. Out of blue, a spike, base, and then they'll dilute the shares and it'll tank. Hold on, guys. I just got to take a leak. Understand what I'm fucking saying about where you're fucking on computer and all that fucking cool. I can hear that word from a mile away where white trash. Shit. Get the fuck out of here. You get the fuck out of here. I'll put your fucking higher than your fucking home. What do you think pays for all this shit? It's no fucking weather. Yo, all right, I'm back. Earnings reports. Earnings reports are big. Think about this, guys, of what we do. So short-term stocks move on sentiment, technicals, news, right? But if you think about, like, stocks, right, they're not going to move long-term on charts. Just because you have a chart breakout doesn't mean a stock is going to move 3-4 months. You know what I mean? A chart breakout and a release of technicals, it can move a stock 5%, 10%. You know what I mean? Like, it can move a stock temporarily. But it can't move a stock long term. All right? It can't move a stock long term. And that's really huge. So long term, what moves stocks is earnings, right? Earnings is the catalyst that can move stocks for months and years. Like, if the stock is, think about it, if the stock is $5, how is it going to move to $500? Is that going to be because of a technical break, or is it going to be because the stock has amazing earnings? And that's really where everything gets, I mean, that's a central thing of what moves stocks. All right, that's a central thing of what moves stocks. And so all the biggest stocks, right, the Apples, the PCLNs, the CMGs, right, anything that moves stocks up, like from something very small to something very huge, right? This is not just because it broke technicals here, and it broke technicals here, and it broke technicals here. That's a small part of it. But the huge thing, guys, is it's the freaking earnings, right? It's the earnings that is the thrust behind stocks. And long term, that's what moves stocks. And if you think about even the people that trade stocks long term, right, that can buy a lot of shares, the mutual fund investors, the hedge fund investors, all these fucking people, they buy the stocks based on earnings. And that's really huge. You got to always keep track of earnings if you want to be a swing trader. And I'm not talking about like sitting there and analyzing the earnings. Analyzing the earnings, we're not professionals at that, right? We are retail people. We can glean insight into earnings, but we can't analyze it like the best people on Wall Street would. But there are a few advantages that we can use to turn the earnings and match it with our charts. And now all of a sudden we have a perfect storm of a stock that can really fly. Let me see if I can get my Cello chart up. Boom, 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 boom. So earnings reports, you can read these on Yahoo Finance, your trading report, trading platforms, really anywhere. I find that earnings themselves don't matter, right? People, especially retail traders like us, we always try to rationalize why earnings are good or why earnings are bad. And usually you'll always find like people rationalize, hey, I'm going to hold this stock because the earnings are good. I'm going to hold this stock because the earnings are good. And most of the time why they're rationalizing that is that the earnings themselves, they may have read them as good, but the stock price is going down. So then the key is this. If the earnings are so good, why is the stock going down? Like, how can the stock go down? If the earnings are so good, right? Most likely, right, they're rationalizing or throwing upon their own personal bias to cover up what potentially might be a mistake. And I do it all the time too, right? We all have been down in a stock and looked at it and been like, well, the earnings were good, or this PR was good, or I'm just going to wait till, you know, this comes out because I know they got a new product out. The iPhone 5 is going out. I mean, how many people did you hear get sucked in, like when Apple's at $600, $700, and they buy it, and they buy Apples, they say the iPhone 5 is coming out. Like, hey, oh, aren't you just a genius? So you realize that the iPhone 5 is coming out in 3 weeks? Like, where did you read that? Just some special magazine? No. Everybody knows the iPhone 5 is coming out in 3 weeks, right? And so you can't really rationalize it like that. People will always try to rationalize why earnings are good, but we aren't trained to read and interpret earnings. We don't have that training. Like, you guys have training, that is for sure. You guys have training because you've been through this boot camp. So you have training on charts, the motivation to market participants. You have training on news, but we don't really have training on how to read balance sheets, right? It's beyond us. And it is. I mean, I know this because I tried to read them and I can't do it. The real important part is the market reaction to earnings is what we care about. The market's reaction to earnings. Think about this, guys. If the earnings were great, then probably the stock is going to go up, right? If the earnings are great, probably the stock is going to go up. I mean, that is just a very, very simple way to look at it, right? And it doesn't necessarily mean that stocks themselves will just go up for one day, right? When you have when you have great earnings, right? Like something like an ANF, stock is at 30, opens up at 38, but see, it keeps running, right? It keeps running. So just because the earnings are great, it has a gap up, doesn't mean that's the end of it, right? People are computing what the real news is, and it can take days. Like, right, no analyst can just be like, hey, this stock is worth $60 in 5 minutes, right? They have to read their earnings, they got to extrapolate it, but then momentum comes in. Momentum and volume and news and rumors, and right, you build up that perfect storm of stuff. And look at, like, it wasn't like there was much volume coming in, but right, the earnings were good and people were figuring it out, and so it took a long time, and it would just keep coming up. And it'll do that for a while as people are getting into it, right? GMCR, right, they have earnings, it opens at 34, right, closes at 37. So that whole day people are figuring out the earnings were good. dips a little bit, and then what does it do? It keeps going back up. And that's really where the key comes in, is these things can run for a while, but the market's reaction is huge, right? If it holds its pop, right, then people are starting to get into that stock. Once a stock beats earnings for the first time, it'll often lead to second and third earnings surprises. Think about like when a stock pops for the first day, right? You see a chart and has like a decent move. Does it really just pop for that one day? Or do you often find like stocks, like when you're looking through your charts, that they run for 2 days, 3 days, 4 days, 5 days, right? They have a string of succession where they keep running up. And earnings is the same way. Once a stock beats earnings for the first time, right, it's a surprise. It's obvious that this stock is in a huge growth phase, that this stock is doing things that are unordinary, right? They're doing things better than anybody expected them. So what that happens is it'll often lead to second and third and, right, more earnings surprises as, right, the first beat is just, right, this company's getting their footing right. And now they've come up with something, right? But the great companies, what happens? One win begets another win that begets another win. One product begets another great product that begets another great product. So when a stock beats earnings for the first time, it'll often lead to second and third earnings surprises. The real advantage of playing earnings comes in when you're playing the unknown stocks. And I'm not saying unknown like, nobody's ever heard of it, but the stocks that are not widely followed, like the Microsofts, the Googles, right? Then the earnings have a bigger impact as they come from left field. In these stocks, even if you can come in after the earnings, you can still catch the bulk of the move, as it takes people time to compute the impact of the earnings, as nobody's following it. So you get, like, say, a stock like Taser. Taser, T-A-S-R. Taser's been blowing out earnings for, a year, more than a year, right? But nobody had ever heard of it. But what happens is when they blow out earnings, it takes people a while to figure out what the heck is going on in this stock. And so it just keeps climbing. So, you'll get a stock that's just awesome, and, it'll be down real low. And, right, they blow out earnings again and again. And all of a sudden, you get a stock that is totally coming off, a bottom, and it keeps running. It keeps running. Bonta is the same way. Bonta is a stock that we traded when it's a couple bucks, and down here, and all of a sudden you get one earnings beat and another earnings beat, and they just keep going. SWHC was very, very similar. One earnings beat begat another, and then it begat another, and then it begat another, and you just get these stocks. They come in, they're just a couple bucks, and they just go nuts. Like, right, SWC just went up like this for no reason? No. Right, people were buying guns, their earnings were good, and next thing you know, you've got something that really, really flies. But the best ones are going to be the ones that are like newer companies that people haven't heard about. There's no analyst covering it, right? What's an easy way to figure out if any analyst is covering it, right? You go in, you can see like on the Yahoo Finance. Hold on one second, guys. Boom, 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 boom. All right. So analyst opinion, right? Analyst opinion, yeah, analyst estimates. Number of analysts, 5, right? So this is, at least it's a little bit covered, right? But you'll be able to see if a stock, how many analysts it's covered by. So some of the hottest stocks that really start taking off, right? At first, there won't be any analysts. And like a stock like Taser's been beating earnings, right? It was $2. So it's been beating earnings for a while. But, right, it's only got 3. So, right, imagine when it was imagine when it was here. Like, how many analysts do you think covered it then when it's just going down every day? Probably none. So when it finally explodes, right, you get one analyst covering it. And he recommends, he's from Goldman Sachs. He recommends that, hey guys, he recommends this club. Check out this Taser company, they broke earnings. So now the guy at Citigroup is saying, man, this guy is covering SWHC, it looks pretty good, right? All of a sudden now he is covering the stock. And so covering the stock doesn't mean anything, but think about this, right? If the brokers at a big company are covering a stock and it's unknown, and there's 500, 600,000 shares in volume, or, I'm just making something up. And now this guy recommends to all his clients, right, the chief analyst or somebody like that, they're recommending their clients, and they've got millions of clients, hey, this stock is a buy. I mean, are you going to get at least some mojo out of that? Of course you are, right? So that's what builds up the momentum. All of a sudden now you've got one person covering it and then another person covering it, and all of a sudden, everybody's on it. That's what happened with JVA. JVA, like this company, and I've been following this company forever. I still can't even figure out what kind of coffee they make. It's like coffee holding company. I don't even know the brands. It's like, the company supply private label coffee under 39 different labels, wholesale retailers, blah, 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 blah. So instant cappuccinos, blah, blah, blah. Cafe Supremo, blah, 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 Don Manuel. So basically a bunch of companies we've never heard of, right? They only 69 employees. But when the thing started going, right, and it's just $5, $6 stock, and it has its first earnings breakout, right, nobody's covering the stock. And so that's how you can get it to go from, right, I mean, you couple that with the low float, then you couple that, it finally goes on people's radars and somebody's covering it. Now you can get a stock that's totally exploding. So the characteristics of an earnings breakout. Earnings beat analyst expectations. The number isn't important so much as that it exceeds expectations, right? We need it to be a surprise. If everybody knows it's going to do something, then it doesn't matter. 2, strong pre-market volume, right? If the earnings are hot and they come out at 7 in the morning, 8 in the morning, right, is anybody buying it? Are people interested in it? Gap up. 3% or more is ideal. And guys, do you notice the pattern here? We really, for all our setups, we kind of use the same thing, right? That's what trading is all about, really taking something that's complicated and trying to make it simple by using the same things over and over. Gap up. 3% or more is ideal. 4, the float is important on earnings plays, right? Over 500 million tend to retest, right? The earnings will come out. Right, the earnings will come out, and it'll kind of retest the breakout, right? It'll pull all the way back to the breakout bar, right? As long as the breakout bar holds, the stock is in play. That's how I used to play earnings when I was in swing trader all the time, right? If it would pull back, I'd buy it, put a stop under, as long as I could get at least a 2-to-1 reward to risk ratio. Remember, 2-to-1 is a reward. And then I would just swing trade them because I know that earnings, if it's a beat, it can go for a long time. It's a great swing trade setup. Right? ANF, right? Pop, and then when you get the pullback, as long as it holds the bottom of the breakout bar, it can happen. And if you think about it, if you're going through like some of the stocks that have been like the hottest over, the last month or so, and they'll have like, right, they'll have earnings probably in play. And I haven't updated this for a while, but, right, so you want to go through, you'll notice like some of the same things happen over and over. Stock will have earnings that'll pop up and then it'll come back. During earnings season, like what I'll do is like the stocks that really break, like the A&S or the GMCR or whatever, the FSLRs, like anything that really broke on earnings, right? Well, I'll keep them on a list. And so when I get the pullback or something like that, that'll give me the opportunity to let it refresh, and then we can get in. So over 500 million, they tend to retest, right? It'll come back and retest a breakout. Under 100 million, right? Most likely, they're just a lot less likely to pull all the way back because the float's too low. And then if it's under 20 million, these stocks can run for months upon months sometimes without retesting that original breakout. They might have a little bit of dip here or there, but they won't come and retest. 5, on an earnings beat, stocks that have IPO'd in the last 2 years can go even further. Sometimes if it's a new IPO, these things can go just nuts. I mean, you'll see it like the stocks like, man, there's so many IPOs that have just been hot, but like the stocks like BCA, BCEI, this is a brand new company that's been around basically since January 2012, right? It's a fairly new company. And so when they have earnings breakouts, it can go crazy. Coors is very similar, just big uptrend, right? Started at $25 when it IPO'd, right? Do you think this thing is just popping up like this for fun? No, not at all, right? These are coming from earnings. And so an IPO stock that beats earnings, those stocks are going to be in play a lot. And so, you want to watch these new stocks that are having, their earnings. So like Solar City, right, is a new IPO. LifeLock, right, new IPO. So like a lot of these stocks that are newer IPOs, if they beat earnings, they will go. And the reason is, think about the common sense of it. So everybody is trained, right? Like trained to be buy and hold buyers, trained to hold stocks forever, so on and so forth. Find a great stock, hold it forever. So a stock beats earnings and it's a new IPO, you're automatically thinking that this stock is like, right? You're trained to find the next Microsoft or the next Google or something like that, right? So stock beats earnings and you're thinking like you really like solar or something, right? You're thinking the stock this could be the next Microsoft, right? Because it beat earnings, it's unknown, nobody knows about it. And so everybody thinks that, and so they pile into it, right? And that can lift up a new stock because people are thinking, hey, I'm getting in at the ground floor. It's a new stock. It's a new IPO. They just beat earnings. Let's get into it. That can really send these stocks just flying. On a fundamental basis, if you are swing trading these earnings breakouts, you're looking for a few clues to indicate they will run for more than a day, right? So if you're looking at the fundamentals, some of the things that I noticed that work, the word 100% in itself, right? If you think about 100% growth or 100% anything, that's hot, right? I mean, that's really hot. I mean, it indicates a company's doubling in a year. Think about it, doubling. So that's a really good combination. So you see 100% plus EPS growth, 100% plus sales growth. It's like the first or second earnings beat. The float is very, very low, below 25 million. And then it's got, no analyst coverage, so maybe one analyst covering it. So it's a stock that's a hidden gem, right? Because people don't know about it. The people in the know don't know about it. So think about this. A stock puts out its earnings. It grows 100% in earnings. It grows 100% in sales. It's the first time it beats earnings. The float is low, and no analyst is covering it. And then all of a sudden, those earnings come out, and an analyst from Citigroup covers it. and he says this thing is a buy, right? Because the float is so low, what's going to happen to that stock, right? Now all of a sudden it's going to keep building momentum from the earnings beat. And now you get a stock that builds upon that. Second best combination, right? 40% plus earnings per share. 50% is ideal. IPO of less than a year, right? So it's a newer stock. The float is still less than 100 million, which to me is a low float, right? So if you get something that's still growing fast, it's a new stock, but the float is a little bit larger, that can still work. Restaurants, retailers, man, if these things are sitting at lows and they beat earnings, they will go. Some of these stocks like Con or like Winn-Dixie's, like some of these guys, when they're on dead bottoms and they beat earnings for the first time, like Con was just a few bucks in 2011, right? So this is way after it was lower in 2011 than it was during the market crash. But it finally started beating earnings. It's a retailer. One earnings literally begat another earnings. I mean, I remember last year when we traded the earnings breakout at 11. Pops, right? How does it get all the way to 30 bucks? Right? So stock that's on a dead bottom when it breaks earnings, it's an earnings beat, and you get 25% plus growth. It's a surprise. You're talking about a stock that's going to run. I mean, it really is. And retailers and restaurant companies are so cyclical in terms of the U.S. economy, right? When the U.S. economy sucks, retailers just get blown out. Restaurants get blown out because they're so worried about the American consumer. So you get a stock that's on a low that's been beaten out, most likely for those reasons. And all of a sudden, you find out this company's not only making money, but they are growing their earnings at a fairly fast rate, right? 25% is no joke. Then all of a sudden you couple that with the low float, boom, you've got something. So when you're playing the earnings breakout, right, you scan for the gapper 3% or more. Check the volume, high relative volume. Check the daily charts for key levels of resistance. PR breakouts that break out over key levels of resistance, like 52-week highs, right? See what kind of stock it is. Is it a retail stock? Is it a restaurant stock? Right? If you like the chart, then start finding out more. Is it 100% EPS growth? Is it 100% this? Right? You're going to dig into it a little bit if you like the way the chart is looking and the way it's gapping. Right? We don't want to do all this research if it's not gapping. Like what's the EPS growth and all that bullshit. Because if it's gapping, then we know that the players like it, the stock is in play at least a little bit. And then we can add in our own flavor and figure out if it's worthwhile to look at. So then how do you trade it? Right? You buy a breakout of the morning highs, right? You break the highs, you go. Number two, you buy within the intraday base consolidation with a stop under support. CNW, we traded this bad boy last year. I don't even know what this stock does. But so it gaps up to 34 bucks on earnings, right? And it actually continues during the day, $3 more. So the stock, what does it do? It spikes up. We don't just buy these spikes, right? We buy where? When we see a line in the sand, when we have an easy way to identify where to get in, but most importantly, where to get out, right? That's what we want to do. We're always protecting our risk. We're always protecting our butts, and we want to know when to get in, but most importantly, how do we get out in a low-risk way so that we protect our capital? So the stock spikes up, and then see it starts to base out, and then we get a little pop here, and then it bases out, and then right when it goes, boom. Right, you get right off the bat, what's from here? 35.94 to 37.25, right? You get a nice little pop right there, bases out, and you even get a secondary pop. I actually bought this thing early. See, I bought this thing on this candle right here because it was coming out of the consolidation. It didn't really go. But I kept my stop under the line of the sand. I put it right under the VWAP, actually, on this bad boy. And see, it popped up. And then see, I was riding along on the 20 SMA. So then I changed my strategy a little bit. I said, I'm not going to put my stop under the VWAP. I'm going to put my stop under this 20 SMAs. The line in the sand has changed. So I adapted a little bit. And I waited 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. I waited 15 minutes for it to break out. So, guys, I did misanalyze it a little bit, right? And that's going to happen. Sometimes you misanalyze things. But as long as it holds a line in the sand, we can still keep it going. So then when it breaks, bada boom, now we got something. That's a breakout. That's low risk. We know that the earnings are behind it, so it's powerful. We have that fundamental catalyst along with the technical move, and that's when we've got some run. Vox, right? This is a stock that's on a dead bottom. This is what we're talking about, right? Sometimes you get a stock that's on a dead bottom. It's on the lows. How much lower can it go, right? It's built the base. It's sitting on lows, and then all of a sudden the earnings come out, right? And so you get the morning gapper. We don't buy morning gappers just for fun, right? We wait till we have a setup. So it pops up, comes back down, pops up, comes back down, pops up, comes back down. So what are we building here? Number one, we have a line in the sand in terms of support building. But number two, we have a line in the sand building in terms of resistance. There's a tabletop that's been put on this stock that it cannot get past. It pops up, pops down, pops up. And guys, it's the same exact level, right? We have now an area that we know that we need to buy the stock. So pops, goes sideways, boom, right? You get the thrust. Now, for me, I actually sold most all of this on the thrust because I had 500 shares, popped to 15, and, I ended up selling. This thing came back, tested support, right? The VWAP bounce is a nice bounce play. Came up, tested resistance, and then, ended up going again. But, sometimes, right, I'm just looking for a very specific setup. If I got 60 cents in 4 candles, that's 20 minutes. To me, you have 500, well, actually it's $14. So if I have $14, I'd probably have 800 shares of it. So 60 cents times 800, right, that's $400 or so. If it was a $22 stock, I'd probably have 500 shares. Or, if it's a $30 stock, I'd have 400 shares. And, if it's a $50 stock, I'd have 300 shares, so on and so forth. But $14 stock, you'll probably have 800, 900 shares. So it pops 60 cents, right? That's a nice payday for very little work. There are people in the world that work their asses off all day to make that type of money. And we can do it in a few minutes, we take it. Especially when things go a little bit too parabolic, right? It didn't rest. If it popped up this candle that went sideways and then popped, then we know that there's, it's building up energy and it can keep going. But sometimes when they just pop up, you take it. Let's open this bad boy up to some questions. That is it for now. All right, hold on, guys. Let me filter through this stuff. Dun, 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 dun. Hey, David, how you doing? So David's question is, why do you look for 3% gappers but 4% breakouts or breakdown? David, because the strongest stocks, when they open up strong in the morning, they should still keep continuing all day, right? So I don't want to look for 4% gappers and then 4% breakouts. I want my stocks, to open up strong but then continue higher throughout the day. I look for 3% gappers. The other thing I notice is that a lot of stocks that have like good earnings or good PRs, they're just unnoticed in the morning. They really are. Like, people don't know about them, especially like Dave. We trade a lot of small caps, and so like there's not that many clever people in small caps. And the other thing is there's just not that many people reading the news because they're just unnoticed stocks that are mostly looked at by day traders. And so, I don't look at the 4% breakouts just because I want to catch the gapper. And so, I lowered it a little bit. I found that it just I was catching better runs off of it. It's nothing scientific at all. As you know, a lot of what I do is trial and error, as a lot of what you guys are going to do is trial and error. Key Wester, I don't check the gapper list at 9:45 in the morning. I will check it at like 9:25 before the market opens to see what's gapping. And then you're right, around 9:45, I'll see if there's any hot stock that's just flying in the morning that I might have missed on my gapper list to see like what's, moving. So you're right. I think that, that's probably a good time to see not the gapper list, Key Wester, but the top gainer list, just to see if there's a stock that's flying that we might have missed, because maybe it might be in play later that day. So good eye. That is a good, good way to look at things. Key Wester, so I don't use any indicators for red to green trades. No indicators for red to green trade. I'm looking for stocks that were hot the previous day, that wash out in the morning, they rebound, and then they go green. It's preferably from a somewhat of a decent intraday base, so we're not chasing something too extended. But in terms of indicators, I don't use any because it's an intraday setup. Alan, we will talk about VWAP on Tuesday. VWAP is just something that I put on my intraday charts, and it basically serves as a moving average. I use it the same exact way as I would the 20-day moving average. You're going to see it on every single one of my intraday charts. It's actually my favorite kind of thing to do. What you'll see a lot often is the stocks that make the moves in the morning, their first tests, like off the VWAP, will often get bought, and so I use them as areas of reference. I don't necessarily just say I'm going to use the VWAP, but we actually use them when stocks break down. Like I say, a stock breaks down and then it bounces into the VWAP. You will often see me in the chat room short it. That's one of the #1 short plays I do in the chat room, is when a stock breaks down and then it bounces to the VWAP, I just take a short on it. And obviously this is a little bit different. I'm just kind of pulling up a random stock. But we use that a lot. So if you're thinking about like, say, a stock that came out with news, and I did it actually the other day. What's the stock we traded on? HLF, right? HLF. I use the VWAP a lot, especially for only for intraday trading. Actually, I'm sorry. So I wasn't trading on Friday, so I don't know what HLF was doing. But see this on Thursday when I shorted HLF. So it started off really strong. Then it broke down, and then it broke up here, and then it came all the way back down. And then see how it popped up and it faded a little bit at the VWAP, and then it popped up again right to the VWAP. So we got 2 tests of this thing, and then it was coming down. So I knew that we had a line in the sand here as I kind of kept testing this level, and it failed at the VWAP, so I know it can't break over the VWAP. So when it broke this low, I just shorted this for a day trade. We shorted this thing at 40, 50, 400 shares. So nothing huge in terms of investment, 400 shares, and right, it spikes down. We just cover it right in this spike. This thing goes to 9.39, 12 or whatever. So it's $1.50, $1.40 drop. You got 400 shares, right? You start covering that thing. We are day traders primarily, right? Somebody gives you 400, 500 bucks in a few minutes. Take it, right? You take it and go. And so we use this VWAP trade all the time. And actually, that was the exact setup I used on HLF on that day. Look at this previous day here. The VWAP, see this thing right here? When HLF had a nice little rump. And so, remember, we're always looking for a line in the sands, right? So HLF starts at 36.25, right? Spikes up in the morning. See how it spikes up and then comes back down, tests the VWAP, and then it bounces to 37.50. Then it comes down. And see how it rides on this VWAP? And so the VWAP is not the all-knowing indicator. But if you see a stock that is interacting with the VWAP, making the VWAP important, right? Every stock has its own story. So now the VWAP becomes important because this stock is interacting with the VWAP, making the VWAP important. So the stock spikes up, and then look what happened. Comes back, tests the VWAP, spikes up a little bit. But basically, it's riding above the VWAP. So what do we have here? Guys, we have what we look for. Remember, not every stock is going to give you what you look for. A stock may be flying and it may be going up, but it might not give you what you're looking for. That means you can't trade it. Even though it looks like it's going to move, and it is going to move, if it doesn't give you what you're looking for, we don't trade it because we are looking for setup, line in the sand, low risk, high probability. So the stock is basing, right? We have a line in the sand. So when it starts coming out of the base, right, what do we got? We've got to buy, right? You buys, it flags, goes, right? And this is our trade. This is our trade, right? First spike, we always sell half, put a stop at our buy price, it's flagging again, so we know that we don't want to sell this thing because it's flagging again, right? So we know we don't want to sell it because it's flagging again, so we just wait, and then we ride it up. When it spikes again, boom, we take it out. And that, my friends, is how you do a day trade on an intraday chart. Just simple. Wait for a line in the sand. Wait for something to interact with the way we look at stocks. If it becomes important, it is important. And now we have a line in the sand, and you just let it roll. You know, I missed a run on RIM. I missed a run on RIM on Friday, guys. So I didn't see the action necessarily. Let me take a look and just see what was going on. I mean, that was a key breakout because it was bear flagging very heavily under this moving average, and it looked like it was going to break down. It broke up, and now it's very close to its highs. So right now you got to be careful because it's a little bit far from its, where it broke out from, and its old highs is just right above at 14. So you got to measure your reward to risk ratio. But the stock is strong, so it's in play. So I mean, look how it closed on highs, and there's a nice volume. So it's in play. So this is a stock that I would watch for day trades, but I could not swing trade it because I couldn't swing trade at this level because my reward to risk ratio, my upside is to 1427 or maybe 1420, but my downside is to 1249, right? So that doesn't give me the right RR for a swing trade, right? Because it's basically, it's a toss-up. There's actually more risk than reward. But now this was a huge move. Obviously, it's making a run, so it's something you want to watch for day trades. See how it closes basically near highs, right? It was riding up all day. So something you might want to watch for day trades, but you don't necessarily just swing trade it because you don't got the proper RR. Remember, guys, a strong stock can be day traded, but you only want to swing trade something when you have a proper RR, a line in the sand, right? You have an easy way to measure everything. So this is a stock that I'd put on my watch list for day trades, for sure. But it's not on my watch list for swing trades because it's just not ready to be swung. I hope that makes sense, guys. I'm sorry if sometimes I'm not clear. Andrew, RIM can be a turd, but it wasn't a turd on Friday. Craig. So Craig, you can do alerts a couple ways. I like to set it 1 or 2% above where I would buy. And when I'm watching something that's close to my alert, I always stick it on the bottom of my watch list, like the few stocks that are near my alerts. Just or you can set it to the top, whatever, however your platform is set up, so that you can read it. And that way, I'm always like, it's in the back of my mind. I'm actually looking at it, and that that should be something that's good. And the other thing with TC2000 is, like, say, like, you drawn something, and you say, I want, you could set this thing here, right? You could set the alert, or you could say, you know what, I want to be alerted before that, right? Before it breaks out. So set your trend line a little bit earlier, set your alert for that price, right? So then when it does finally get to this level, you've had, 50 cents or 30 cents or whatever to look at it. Maybe you got to get a little bit closer. You know what I mean? Guys, when you want to get things a little bit closer, just zoom in on your charts. Andrew, I don't know if it's going to turn around right now. It's just something that I'd be watching. Craig, and a lot of it's going to be your personal preference. What I like to do, when I get a lot of stocks that I'm watching, is actually sit, like put a note. Like, you got a stock here, put a note. Like, hey, 550 is trigger. If see, intraday base, buy earlier, right? Leave yourself a note so that you can, figure out what's going on, right? And that'll give you a little bit of leeway. And the key is to be organized. Craig, I think one of my faults as a trader, I think, and I still think that it's holding me back from perfection, is my organization skills. I could set an alert and leave a note, right? And cover all my bases. And that takes just about 5 extra minutes a day. And for some reason, I haven't had the willpower to make everything perfect. And so every day you'll see me do a vlog, and I'll miss a couple of the trades that exploded. And part of it was just part of it is just that I'm a little bit unorganized at times. I have a very great routine when I wake up in the morning, but sometimes I just run out of time where I don't get to do it. So my great routine is really not that great, because I should wake up 6 minutes earlier so I could fill everything out. But if you can be organized, Craig, I think that you have an advantage over so many traders, because most traders are not organized. They are not. And so they miss things, and because they're not organized, they leave a lot of things to chance, because they haven't when you leave a note, right, and you leave an alert, you essentially are telling yourself where you would buy a stock and what you would do with it, right? So you're not leaving things to chance. You're leaving things to probability, and you have thought about it. And so that's something that I think will really help you if you can get that down. That's why chicks are such good traders. That's why Mary Beth's a good trader. Mary Beth screws up trades all the time, but she writes down a journal of every single trade, and she trades like 500, 600 times a month. And so she has like a running log of all her great trades. Let me see. What was the S&P 500 on? Was it down or up? All right, so the S&P 500 basically closed at highs. It was down for a little while. IMAX was down. It's kind of a bull flag if it can hold, right? We're right at, notice how it stopped exactly at support? Right here. So this needs a hold. It's a bull flag if this holds, right? If it doesn't hold, it's going to go down to here. If it goes down to here, that's a whole nother dollar. Then it's not a bull flag, right? If it gets down to here, you might get a tap back to the 20 from there, but it's not a bull flag. So this area needs a hold. If it holds, then it's a bull flag. I like the volume pattern on it, James. Right? The volume pattern is decent. We got some big up days, small down days. So the volume pattern indicates that this stock is not necessarily just fading, that it could be some profit taking because it's just up a lot, but it needs to hold support. If it doesn't hold support, then everything is over. Anybody else? Hold on, James. KKD. I really like this one. I'm going to put that on my list. Boom. I haven't updated my thing, but I like this one. You got it, right? You got a line in the sand right here, bro. Bam. Good stuff. Good job. MNI. This thing is hot, bro. I'm putting that on my list too, man. You just made my watch list for me. Good job. HCO. Love it. This is good stuff. So basically what, James, you're saying is that you are the teacher's pet for today. Good job. This is good. I like this. I like anything. Now, my one red flag with HCO is that the volume is very, very low. See how, you know when the volume of the liquidity is low, when the candles look weird like this. You know what I mean? Where there's a lot of spaces, where like, I don't know, like even a normal stock like an right? SWC, see how the candles are much cleaner, right? It's much cleaner. That means there's more liquidity and it's easier to get out of. See the HCO, it's all over the place, so the liquidity is less. But I must say, James, that is fantastic. These are stocks that I want to be watching. So I like where your head's at. Send me whatever else you got, because that is fantastic stuff, I must say. Anybody else got a question? What do we got, folks? This is all you got? This is all you got for me? You can't even tire me out. Going once. Going twice. Sold. I am out of here. I love you guys. I will see you on Tuesday. I'm going to knock it out of the park. You guys are going to love what I got for you on Tuesday. Peace.